Hey, what's going on, everybody? This is Yusef Scott, and I thank you so much for being here with me this evening. I thank each and every one of you for subscribing. Those of you who have been supporting me over the years, those of you who like my videos, I thank you so much. Even those of you who had just stumbled on my whether it was my video or my page, I thank you so much for doing so. A lot of you are in search of certain things online, and like I'm told a lot, I don't know how I found your video, Yusef, but I'm so thankful that I did. And let me tell you, I'm so thankful that you're here. So let me just give you guys a little advice. This is for those of you who are traders and you're struggling with keeping your trades in good fashion. Okay, I'm going to give you a little bit of advice. All right, so let me just show you something real quick. I had just opened up a demo account, and I want to show you guys. I'm going to give you guys a little advice. So let's go to the day chart, and let's do this. Go to my terminal, and let's see, trade. All right. So as you see, this is a demo account. It's brand new. Just opened it up for this particular example that I want to show you guys. All right. Now what I'm going to do is I'm going to open up a couple trades. Hold on one second, you guys. I apologize. My phone is constantly. All right. So let me turn it over. So let me just show you guys. let me show you guys what I'm talking about. I want to get this video out of the way because I think that it's gonna surely help you guys. All right. So this is what I want to show you. All right. Because I get a lot of emails, I get a lot of calls and text messages about, hey, I did this in my account, I did that in my account. What do you think? So let me just show you guys. For those of you who do not know, all right, if you have, let's say, a $5,000 account, something that I instruct my students is this: I do not have them trading over. I don't have them trading where. Let me just say this. I want you guys to keep a 1,000 pip range so that you won't get stopped out. All right. So basically, let's say this was a $1,000 account. All right, it's a $5,000, but if it's a $1,000 account, you shouldn't trade over $1. That way, you keep a 1,000 pip, give or take, range before stop out. All right, you have enough time, more than enough time to close the trade out, and you have that buffer. Here, it would be, of course, $5. All right, so at $5, that would be your max. That will be your max, so that you do not fall victim to a stop out or margin call. Okay, so what I'm going to do, I'm going to open up a few trades and I'm going to show you exactly how this works. Okay, very, very simple. So let me just open up my trade panel, and I'm going to have to set this up, do all the one-click stuff because this account is not set up at all. So let's go with one-click trading. Accept that. Okay. Now we're good to go. So let's do this. Let's actually go with a pair that I know that moves, and that would be the GBP NZD. As I said, this is a brand new account. So to open this stuff up, here we go. NZD. Boom. Go with that. Boom. All right. So here we go. All right. So we're on the GBP NZD. All right. Let's go to the day chart. We don't mess with nothing else but the day. Alright, so what we're going to do, I'm going to open up a couple trades. Now I'm going to trade at $1 a pip. Alright, and I'm actually going to trade at, let's start at $1 a pip. So, actually, come on, number. Okay, let's move this over. Let's just put one there. Alright, now watch. I want you to pay attention to this area, okay? Because what's most important is your margin level percentage. That's gonna determine. That's gonna give you a realization of your strength in the market. All right. Now let me just show you. Let's just put a sell in. All right. So we got a sell in at $1. Okay. Got a sell in at $1. Now you notice your margin level percentage. Okay. You see that. Now every trade that I open up, this is going to decrease, at least on the sell. If I was to open up a buy, it will increase because my account is now balanced. Okay, so the more sales I open and the farther out of the money I go, the lower this margin of percentage gets. Once it realizes profit, once it's in the profit, then it increases. So let me just show you what happens when you constantly open up trades after trade after trade. Let me just show you. Now this is going into the money, so this might not be the best example, but let me just show you anyway. Open up a sale, this margin of percentage number should decrease. See how it dropped down to 1904? All right, just show you. Now it's at 1268. Let me just open this up so you can see. Where we at? Right there. Let me just pull this up there. All right, so now let's open up one more. All right, so now right now we have 5 trades open, which is the equivalent of $5 a pip with a $5,000 account. Now the thing about this account is, I believe I set the leverage at 100 to 1. All right, so of course the leverage is going to be smaller, but nonetheless you still have a 1,000 pip range, which it keeps your account secure. All right, whether I close this out at, let me just close all of these out. Now remember 757. All right, so let's close all of these out with one click trading on, and we took a loss on those, so let's increase this now to 5. Let's open up a sell. Same thing. Okay, so it's not, there's no difference. But now when you start increasing, when you start stacking your trades, all right, and you start doing some things that's just not, I'm just going to open up this. Let's put a 0 there. So let's go with $6. Now watch. All right, so the more I add to my account, the more I add to my open trades, the margin level percentage decreases. That's why when a market starts going against you, it doesn't take much for the market to pull you out. All right, so you have to keep that in mind. So what I instruct my students is to keep that 1,000 pip range, so that you won't have to worry about stop out. All right, as long as you keep that, it doesn't matter. You can have open a number of trades, but keep yourself distance so that wherever the market goes, you have that. It's sort of like a trailing stop. You always have that 1,000 pip range. All right, so you want to keep that in mind. That way you're not putting yourself in jeopardy, because we're trading live money. We're trading our money, and you don't want to lose your money. So make sure you keep that in mind. All right, so that's essentially what I wanted to show you guys. If you keep of a 1,000 pip range, you will prevent yourself from being stopped out. You know, you still want to make sure that you're watching your trades, but at least you know that, okay, if I have a $1,000 account, and if I do not trade over a total of $1 a pip, you can do 3 trades at, you can do 5 trades at 10 cents. You can do 10 trades at 10 cents. You could do 2 trades at 50 cents. Just don't go over that $1 mark. That way you keep that 1,000 pip buffer. All right, you want that range there. So with that, now notice with these trades open, they're all on a sale. If the market goes up, of course your negative equity goes up and your margin level percentage decreases. Once it gets to a certain mark, it's going to start shutting down your trades automatically. All right, so let's just open up some trades as an example and watch what happens to my margin level percentage. At some point I will not be able to open up more because it's telling me, hey, you are at that point where damage could happen. Okay, now it's going to let you open up trades, but if you notice, you're decreasing your strength inside of the market. So you will not have, sometimes if you do this, you will not have enough. As you see, it's in red. So that goes to show, while you can open up trades, it's going to hurt you. All right, it's going to hurt you. So you want to keep, you see how far I open up a number of trades. I have opened, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I have 15 trades open. All right, 15 trades open, more than what I should. All right, now let's just say I have 5,000. I have 14 trades open where I should not have open. I shouldn't have all these trades open. So I'm gonna shut down. I'm just gonna shut them down. Let's just shut them down. You see, I shut them down. Look at my margin level percentage. It's increasing. All right, because I'm giving myself more strength in the market. This is where I want to stay at. Real simple. I want to stay right here with this size account. That way, if this market goes down so low, whatever amount that I have in mind, and that's something else I want you guys to keep in mind. You guys want to have yourself some type of mental, like, I personally don't use a stop loss. I like to, if I'm going to have open a trade, because I'm long term, and most of you don't know this, but I'm long term and I don't use stop loss. All right, and that's simply because when I open up a trade, I watch it like I was about to show you. I'm going to watch this trade go into the money. But in my mind, I know how much I want to give back to the market. I don't want to give back anything. That's why I don't use the stop loss. I don't agree with a stop loss. I don't do the stop loss because basically that's your way or my way of saying that, okay, market makers, big banks, come and take my money. No, I'm not going to allow that. I would rather close out my trade at a minimal loss than give 200 pips back at whatever volume I'm trading. That's crazy. I'm not in it to give away no money. I'm in it to win it. So when I first open up my trades, I'm going to watch my trade go into the money. If I realize that, okay, maybe it was a wrong move, then I'll just shut it down and then start over anew. But I'm not just going to set a stop loss and watch me lose the money. Or if I can't watch the trade fall into deep profit, then I shouldn't have opened no trade. That's my theory. If it's not yours, if you don't agree with that, then that's okay too, but that's just how I trade. So if you want to learn about stop loss, I can surely show you how to use a stop loss, trailing stop, whatever it is. But I personally do not trade it. I like to open up a trade and I like to watch it go into the money. But if I'm trading at, for instance, I'm trading at $5 a pip. If I only want to give up 10 pips, then I tell myself, okay, then once you get up to $50, I'm going to shut it. That's my stop loss. That's my personal stop loss. I'm going to shut the trade down and realize why isn't it going in that direction and see if I can go in the proper direction. So that's just my advice to you. If you want to learn how to trade with these simple techniques, then come on aboard and let me show you, because there's no sense in you giving back any money you don't have to. And my style is very, very clean, very simple, as most of you tell me when I talk to you for the first time. I just want you guys to have other options than a lot of the information that's put out online that really isn't, I mean, it's not, in my opinion, it doesn't help you. But that's my opinion. I just want you guys to know that this is a very Forex is a very simple and easy thing to learn. And it depends on where you're getting your instruction and where you're getting your counsel. If you're not under someone who's going to show you the ropes, whether it's knowing how to trade with a stop loss or not trade with a stop loss, then you're doing yourself a huge disservice. All right. So that's all I wanted to show you guys for now. You guys have a great day. And if I let this trade run, that would be great. Wouldn't it? It would be great if it was real money, but it's not. But this is just an example. I want you guys to see that even if I had to open up trades now, you will notice that the margin level percentage will go down. It will continue going down. All right. And then let me just show you this. So I have $8 on the sell. Okay, $8 on the sell. When I open up $8 on a buy, watch what happens. My margin level percentage will increase. All right. Now it done doubled and then some. Now the market is balanced. It doesn't matter where the market goes, whether up or down. I should keep about $30 loss or negative equity, give or take. If news come out and the of course the news come out, your pip spread widens, the gap widens, of course it's going to increase. Negative swap can do it. The commission, as you see, that can do it based on the volume that you're trading at. So just little things to keep in mind, all right? And of course it depends on the type of account you have open up as well. So I just want to give you guys these little pointers, very simple and easy. Just want to show you guys. Actually, I'm going to shut these down because this is just for demonstration purposes. So I hope you guys realize the purpose of this video, and I will look forward to helping you guys soon. All right, you guys have a fantastic evening. Talk to you guys soon. Peace.